Hi everyone, welcome to another session of our webinar series. My name is Jason Low, Senior Investment Strategist from Chief Investment Office, DBS Group Wealth Management. I'll be hosting the session today. With me, we've got Derek Tan, Senior Vice President, Property Analyst at DBS Group Research. With the en-bloc sentiment still seemingly feverish, we hope to address some of your concerns on how long this cycle will last and how investors should be positioned to benefit from the current wave of new buyers entering the market. Before we get into today's discussion, just a reminder that you can download some of our online publications from the Insights section, which can be found on the bottom of this page. At the end of the presentation, please leave your feedback and comments on the feedback tab that you can see on the left of your screen. But without further ado, Derek, we've seen a lot of interest in the en-bloc market recently. Where are we exactly in the en-bloc market right now? Are we early stage, mid stage, or late stage? And which developers actually has the best land bank or most amount of land bank going forward to harness that kind of property upside?
Okay, what 2.5 years have been, we have seen more than 60 sites being sold en bloc over the past 1.5 years. And all in, we're looking together with the government land sales, potential 37,000 units that will come to the market.
Wow.
And that is almost double that of the supply that we saw that was transacted last year. I think this pays to be a bit more cautious, largely because the developers, after investing such a big amount of capital into the market, we believe that they're looking to at least get some of the capital back through having some pre-sales in project launches, and we have been starting to see that. A number of launches have been done year to date, and roughly on the launch weekend itself, we are seeing at about 60 to 70% sold.
That's considered very strong sell-through rates.
Historically, it's been about 50 to 60% per annum, and that was in a market where things were fairly rosy. At this point in time, to me, at 70%, I would say it's a fairly good job by the developers.
Right.
Look at the list of developers that have won land year to date. We found that most of the big boys are already in there. So I would say that most of the appetite has already been satisfied somewhat with the likes of the CityDev, the ULs, have a number of sites in their land bank, and they'll be looking to launch over the next 6 to 9 months. What will make them want to come back again, in my view, if they can achieve fairly good sell-through rates, i.e. it means that whatever they're selling, there's good demand out there. With that in mind, that I would say the en-bloc cycle will continue in a faster way.
Derek, is supply coming through a problem? Do you see that as a risk that could potentially cripple the property upside?
Okay, looking at what's been sold year to date and launch, potentially 37,000 units that will be looking to be launched to the market within the next probably 1.5 years. So, and most of them will come in 2019. So from their perspective, I would say that supply is more of a risk in the medium term. From now to end of this year, I still see this as a window for developers to come to the market, launch a product that would attract buyers to buy. Main reason, one, I think there's still a fair amount of displaced households that have yet to really buy a home at this point. So I think they are looking for a replacement home, and developers who launch within this window get to benefit somewhat. And two, every year there's potentially 8,000 to 9,000 of households formation that itself also will be looking for a home. So the window is still there. It's just that in 2019 we are potentially looking about close to 20,000 units coming to the market. Certainly with
Is that
choices.
excessive?
That itself is 2 times of annual demand.
Or 2 times of annual demand.
So it will take time for it to be absorbed. And these units will largely come in the central region. Prices are going to take a leap forward. And I think buyers will then take some time to consider before committing to another home.
Derek, going forward, what do you think will be the most important factors sustaining property upside?
Okay, when buyers buy a home, essentially you have to consider many factors, not only one.
Right.
Affordability aside, but I would say that one would have to consider factors like one, household formation, i.e. marriages, that will drive demand for homes. 2, income growth. So if there's going to be sustained income growth, I believe that the property upside can be sustained. And three, in the medium term, not too many black swan events at this point. So I think if these three factors are in sync, we are expecting to see a more sustainable growth in property prices. So for one, at DBS, we forecast that by 2030, Singapore population should grow to about 6.3 to 6.5 million.
So is that in line with the white paper estimates?
Our estimates are below the original white paper numbers, and the main reason is because population growth was a tad slower over the past 3 years. Based on extrapolation, our forecast of 6.3 million to 6.5 million implies an annual growth rate of between 1 to 1.3%. So that itself, I think, will imply a household formation of about 25,000 per annum. So what is household formation? In layman terms, we'll call it marriages. So every year, we see about 25,000 marriages, and we would assume that a newly-wed couple will want to get their own home.
Yeah, they want their own homes, right? Yeah.
Certainly, and assuming that HDB will have their run rate of about probably 15,000 units per annum, we are potentially seeing a demand for private homes about 8,500 to 9,000 units. So this is a sustainable run rate in our view.
How about income growth then? How would that support prices going forward?
I think apart from just population growth, we have to also consider economic impacts like income, which is one of the other key factors to drive property price forward. In our estimates, we are forecasting that income will grow at 2.5% per annum over the next decade. It will certainly be a driver for higher property prices. And the main reason is because affordability. With income growth, certainly one can afford to buy or upgrade into a private property. And I think that will be one of the key factors to consider when we look to invest in another property in Singapore.
So Derek, given the current backdrop, how do you see home prices going forward? Are prices entering a new paradigm right now?
I think, Jason, if I tell you, you won't believe me. But more than 12 years ago, home prices on average were about $1 million cheaper.
$1 million cheaper.
Average home prices have moved at about close to $1 million in 12 years. And we believe that would happen over the next 12 years. So by 2030, we are expecting an average property price transaction to range about $2.5 million. Currently,
the average transacted price to be $2.5 million.
Right. And at this point in time, it is only at about 1.7 million.
Okay.
So what is expected to drive property prices to that level? Next 12 years, once again, population formation, household formation has to be growing at about close to 2% per annum. Continued economic prosperity in Singapore, driving income growth at about 2.5%. That, to me, is a sustainable level going forward.
If prices are going to increase by 1 million, what kind of PSF are we talking about then for the average unit out there?
Okay, what we have seen over the past 12 years is a fall in home sizes. So back in 2004, an average home that was transacted in the market was about 1,300 square feet.
1,300. Okay.
Now we're down to about 1,000. In 2030, it's going to 800 square feet. On a PSF terms, back in 2004, prices was transacting on average 700 per square foot. Last year, it was about close to 1,005 per square foot. By 2030, we're expecting it to grow to about 3,000.
3,000 PSF
per square foot
on an average house by 2030.
Correct.
In that scenario, where would your core central area be trading then?
We haven't done an official estimates, but roughly based on projections and extrapolation, we are not surprised to see that core central region condos will be trading at about 4,500 per square foot at least.
Wow. So
these numbers may seem fairly high, but we did our little estimates. So what we did was to consider the home price to income ratio, how we track historically, and we have our own range.
Yeah, that's my question, right? With prices going to 3,000 PSF by, say, 2030, as you mentioned, and your core central region going to like 4,500 PSF, would affordability be an issue going forward?
I think the thing to note is that Singapore, we have our own affordability range. And so for an average upgrader, we're talking about the 80th percentile. We are looking at a home to income ratio of about close to 8 to 9 times. At our target property price, 2.5 million, 3,000 per square foot, the average house to income ratio should still be at about 9 times. And in that view, I think we can continue to afford.
And this is really supported by the income growth going forward over the next decade as well, right?
You're right. So I think the important thing to consider is that for property prices to hit to that level, we would have to see income supporting, and firstly, then demand, enough bodies to come to drive demand for homes, and that will come from continued household formation at about 25,000. So these are key numbers that we are tracking, and at this point in time, things appears to be heading that way.
So at a point in time, can households actually afford a home?
I think the Singapore property market, we have our own range. So we track homes to income ratio. So there are various levels that we saw. And on the 80th percentile of the Singapore income level, we found that house price to income ratio typically range about 8 to 9 times. And in the condo space, it roughly range about close to 6 times. Based on our projections, house to income ratio by 2030 will be still in the range at about close to 9 times.
Which is in line with your historical average?
Yeah, so what it means is our forecast of a property price increase is supported by income growth. So that to me is a sustainable level. In any event that some of these factors do not come into play, then certainly there will be a slightly slower increase in price in the medium term.
Derek, we've come towards the end of this session. Could you just summarize your key takeaways and perhaps your final advice for the property investors out there?
I would say that firstly, I think people are very focused on the current enbloc fever. I would say things will start to cool.
So things will slow down? Things
will slow down. It's not the end, but what would result in the next leg of growth will be project sales rates. I think developers need to see some form of return of their capital for them to turn a little bit more bullish again. And moreover, there are certain large enbloc projects that would cost at least $1 billion and above. That would take some guts from developers to take them off the market. Secondly, we talk about population growth. I think it's a key driver for a sustainable increase in property prices. Supporting that, certainly income growth and continued economic prosperity. We need to see all of these 3 factors to be at play in sync for a more sustainable growth in price over the next decade. With this in mind, we are looking potentially a 50 to 60% increase in home price transactions. What it means, 1.7 million property that transact today, in the next 10 to 12 years, potentially can grow to about 2.5 million. So I think that is where we see the market going forward.
So the average transaction volume to increase by 50 to 60% by 2030.
Yes, correct. So I think that's our projections based on our above-mentioned factors supporting that increase.
Any final advice for investors out there?
I would say if you see something that you like, do consider your finances before committing. Property is a long-term play. So apart from location, I think you also consider that if Singapore continues to remain an attractive destination, one of the key livable cities in Asia, I would say the prospects for property is bright.
We've come to the end of our property update. At DBS, we're constantly working to bring you the latest and most relevant market insights to help you in your decision-making process. If you could take some time to give us your feedback and comments, this will help us improve our future digital insights. Thank you, Derek, for your time, and to our audience, thank you for taking time with us.